In the last class, we discussed question number 2, rebate on bill discounted. Hope you revised and continue this particular lecture. We'll move on to question number 3. Read the question. Read the question. Interest and discount is given to us. Rebate on bill discounted opening balance is given to us. Bill discounted and purchased is given to us. And the discount falling in the next year is given to us. Closing rebate is given to us. 92,760 is nothing but what? The closing rebate on bill discounted. Past journal entries with the narration is asked for. So closing rebate is given, opening rebate is given. We are just asked to pass journal entry. Read it, try to solve it, then continue. Pause, read it, solve it, then continue. For me, it is simple, just copy and paste. Opening rebate. Rebate on bill discount account data to discount received. We add it to the discount, so predict the discount. Second, we eliminate from discount, discount received account data to rebate on bill discounted account. So let us prepare the discount account. Just copy and paste for me. So by rebate, the opening balance, the discount received during the year is then 19662400. How much? 19662400. The closing rebate we know 92,760. The balancing for will be transferred to P&L account. Transfer the balance to P&L account. Don't go to the next question. We have to learn a concept and go for that. Just copy this wherever it is required. Just pause and copy. Next concept will be bill for collection. We'll just move on that. Before that, I request you to pause and copy if it is required. We'll move on to bill for collection. When you send the bill for collection, for the banker, it is an asset as well as a liability. For the banker, it is just an asset as well as a liability because they have to collect the money. Okay, since they have got receivable, it is an asset. Okay, bills receivable is an asset because from the customer they accepted it for collection. It is an asset. Then when they collect it, it is their liability to take it to the customer's account. So it is an asset as well as a liability. Bill for collection is an asset as well as a liability. How it is an asset? They have the right to collect asset, and they have the obligation to settle the customer. So it is a liability. Yeah, on behalf of customer, I accepted the collection. So I have the right to collect. It's an asset. Then I have the obligation to pay the customer on collection. That is a liability. So let us pause the journal entries. Start. Let us pause the journal entry. When the bills are received from the customer for collection, what is the entry we'll pass? We don't collect. We just receive the bill for collection. What is the entry we'll pass? Bill for collection account data. It is not bills receivable. Bill for collection account data. Debit what comes in to credit the giver to customer's account. To customer's account. Bill for collection account data to customer's account. Don't put bills receivable account. If you put bills receivable account, you are getting it in your name. No, it is in the customer's name. So bill for collection account data to customer's account. When bills are collected, debit what comes in cash account data to bill for collection account. No need to wait. Please take it up. When bills are collected, cash account data to bill for collection account. Then at the end of the year, there may be some pending bill for collection. What is the entry we need to pass? All bills are not collected during the year. Sometimes some bills would have been pending for collection. When bills are pending for collection, what is the entry we need to pass? Simple. The parties who have won the bill will be debited. Party account data to bill for collection. Party account data to party means the person. It's a personal account to bill for collection account. This is the entry when the bills are pending for collection. Suppose if the bill is dishonored, just imagine. If the bill is dishonored, just imagine what will happen. Yeah, we'll cancel the first entry. When bill receivable is dishonored, we'll cancel the first entry. Customers account data to bills for collection. Take that entry also. So when the bills are pending for collection, party account data to bills for collection. If the bill is dishonored, customer account data to bill for collection. Yeah, go through question number 4. Opening balance of bill for collection is given to us. Bills received from the customer is given to us. Bills collected from the customer is given to us. And bills dishonored from the customer is given to us. Can you just fill these amounts in the same journal entry? Bills received for collection means from the customer we got these bills for collection. So bill for collection account data to customer's account. Bills collected means bills we have received during the year. Cash collected 98 lakh 47,000. Just fill up. No need to pass an entry separately. Just go to the specimen entry and fill it up there itself just to save the time. Then when the bill is dishonored, customer account data to bill for collection account. So when the bill is collected, there is when bill is received for a collection, 75 lakhs, then collected, dishonored. What is the opening balance? 51 lakhs. What is the bill for collection received during the year? 75 lakhs. In that, how much is collected? How much is collected? 98 lakh 47,000 is collected. Then how much is dishonored? Cancelled. Okay. So if you adjust it, you will get the closing balance of bill for collection. Closing balance is the bill for collection. Is it an asset or liability? If you look at it as an asset as well as it's a liability. It is an asset as well as what? It is a liability. So how it is an asset? The banker has the right to collect this 43,000. At the end of the year, there is an asset outstanding, that is otherwise the bill for collection. You have the right to collect 43,000. It is an asset. Once the money is collected, is it your money? No, it is customer's money. You have to give it to the customers. It's a liability. So bill for collection is both an asset as well as a liability. Or I will say it is neither an asset nor a liability of the bank. Once collected, it should be given to the customer. So it is not shown within the balance sheet. For a banker, it is not shown within the balance sheet. It is shown outside the balance sheet. It is just shown outside the balance sheet. It is neither an asset nor a liability. Because on collection, we have to return to the customer. Yeah, I am unable to move my camera. That's why, I mean, I'm unable to adjust this logo. I do not know. Sometimes learning is better without the face. So kindly bear with this today. So bill for collection is not an asset as well as a liability because you're not collecting for the bank, you're collecting for the customer. So it is just showed outside the balance sheet as a footnote. We will see while preparing balance sheet. We will see. Okay, we'll record assets, sorry, liabilities, assets. Then as a footnote or outside line item of the balance sheet, we'll show this bill for collection. It is neither an asset nor a liability, or you can say it is both an asset as well as a liability. It is an asset because you are going to collect the money. It's a liability because on collection you have to pay to the customer. So in the exam, sometimes they can ask you prepare bills for collection asset account and bill for collection liability account. It is very simple to prepare. Very simple to prepare. If it is treated as an asset, it will have a debit balance. True balance brought down. What is opening balance? 51 lakhs. Asset account data to customer's account and the mother. Then, if it is treated as a liability, because on collection we have to pay, by balance brought down 51 lakhs. Liability will have a credit balance. Then, when the bill is received from the customer for collection, bill for a collection account data or to customer's account. Since I accept this, It becomes an obligation for me. I have to pay to my customer's account, by customer's account. Because if I collect, I have to pay my customers by customer's account 75 lakhs. For this collection, they are like obligations. By cash, how much is collected? Cash account it ought to bill for collection 98 lakh 47,000. On collection, can I retain this money? No, I have to give it to my customer. So it's becoming to cash account in bill for collection liability account. So on collection, I just return it to my customers. For collection, cash account it out to bills for collection account. For returning to customer, bill for collection account it out to cash. For the bills dishonored by customer's account, because I need not collect, because I'm just an agent by customer's account. So to that extent, I need not pay them. The account is closed. To customer's account, 27 lakh 10,000 for the bill dishonored. By balance carried down, I'm yet to collect. I'm yet to collect that closing balance. That is an asset. On collection, I will pay to my customers. It becomes a liability also. Right? To balance brought down 51 lakhs, to customers account 75 lakhs. By cash 98 lakh 47,000, dishonored 27 lakh 10,000. The balance is 43,000. These are all dummy accounts. This will not come in the main ledger account of the bank. This will be shown outside the balance sheet. The closing balance of bills for collection, it will come in the outside balance sheet. Yeah, cash account it out to bill for collection. And that will be given to customers. On collection, it will be given to customers. So collected and that is given to customers. Dishonored, it is adjusted with customers, that is bill for collection account. And yeah, in the customer account, the real credit will be given for the cash receipt for the bills. Let us go to question number 5. Read the question, then we will solve it. Just read the question, we will solve it. Read the question. What is the discount earned? What is the discount earned? 4,000 into 15% into what is the average time period of discounting? 146 by 365, 240 crores. Add opening rebate on bill discounted. What is the opening rebate on bill discounted given? 27 crores. Less closing rebate. Closing rebate outstanding after 31st March is 73 days. So 73 days for the closing rebate. So 600 crores into 15% into 73 by 365. So we add opening rebate because that belongs to current year, minus closing rebate 600 into 15% into 73 by 365 minus 18. So that is the discount to be recognized in P&L account. Discount that has to be recognized in P&L account. Discount earned, add opening rebate that belongs to current year, less closing rebate that belongs to next year. Net discount has to be recorded. Journal entry is just a copy paste for me. You try to do it on your own, of course. For opening rebate, rebate on bill discounted accounted out to discount receipt. Then discount receipt accounted out to rebate on bill discounted for the closing rebate. Take up this. If required, you can pass it and copy. pause and copy. Try question number 6. Bill for collection asset, bill for collection liability. After this, try question number 6. This is question number 5 is a repeated concept only, right? Discount received, add opening rebate minus closing rebate. Only thing is that based on the percentage and number of days, we work out both rebate as well as discount. So rebate on bill discounted account data are 2, discount received for opening rebate 27, discount received account data are 2, rebate on bill discounted for the closing rebate 18. Try question number 6. Please try it on your own so that you will get a better grip. Prepare the bill for collection asset account and bill for collection liability account. Hope you tried it. Opening bill for collection is given, bills received is from the customer is given, bills collected is given, and bills dishonored is given. From the previous problem, if you just cut copy and paste the bills for collection asset account and liability account, it is over. Yeah, let me do. What is the opening balance? 10 lakh 15,000. From customers, we receive 89 lakh 75,000. By cash, 64 lakh 50,000 collected. Dishonored is how much? 11 lakh 25,000. As a balancing figure, we get the closing balance. Just do the opposite in liability. Yes, 10 lakh 15,000, 89 lakh 75,000. Cash 64 lakh 50,000. Returned is 20, that is 11 lakh 25,000. The balance is 24 lakh 15,000. This is a very good question for 3 to 4 marks in the exam. So please pause and copy this. Please pause and copy this if required. Next, we'll go for how the banking companies classify the asset classification, and how they recognize income. Recognize income means how they take it to P&L account, income recognition, and the provision for bad debts, how they create provision for bad debts. It's again an important part. How they classify the asset, how they recognize income, and how they create provision for bad debts. Shall we? What do you mean by asset for a banking company? Sorry. What do you mean by asset of a banking company? Asset refers to loans and advances. Loans and advances given by the bank. They give different types of loans and advances. Short-term loans, long-term loans, secured loans, unsecured loans, bank OD, cash credits, okay, loan against property. So many loans they give. So that is called as asset. What is an asset? The loans and advances given by a banking company. Okay, which includes even discounting of bills also. Discounting of bill also is called as which one? A form of loan given by the banking company. So asset refers to loans and advances, different types of loans and advances. We'll classify them into performing asset. Performing asset. What do you mean by performing asset? There is no problem in recovering the money. They are also known as standard assets. No standard, I mean, it's called as standard asset. There's no problem in recovering. There's no problem in recovering principal amount, interest amount, or EMI amount, whatever you say. There is no problem in recovering that money. So standard assets are those, there is no problem in recovering that money. Then non-performing assets are known as substandard assets, which means there is a problem in recovering that money. Or there is a issue in recovering either principal or interest. They are known as which assets? Substandard assets. The assets where there is some problem in recovery of cash or interest or principal amount or EMI. It can be anything. There's a problem in recovering the money. They are known as which assets? Substandard assets. So in case of general loan, when a loan will be called as a substandard asset? Okay. If the interest or principal or loan or EMI is outstanding for more than 90 days after the due date. It can be interest due or principal due or loan due or EMI due outstanding for more than 90 days, not from the granting of loan. After the due date. After the due date, the customer has not paid for 90 days. Loan would have been given 10 years back also. EMI was due 90 days back, still it is outstanding. From the due date, if it is 90 days outstanding, that is called as which one? That is called as which one? Substandard asset. For agricultural loans, we can classify them into, okay, probably short-term crops and long-term crops. For short-term crops, it will be like 2 harvest season. ரொம்ப simple. ஒரு farmer 2 harvest seasonல pay பண்ணலைன்னா there's a less chance of paying. So for short-term crops, you can wait for 2 harvest seasons. For long-term crops, you can wait for, long-term crop means more than 1 year crop, like turmeric, all those things. So short-term crop, if the farmer has not repaid the loan or interest within the 2 harvest seasons, then it is called a substandard asset. For long-term crops, 1 harvest season. It can be banana, okay, or it can be, growing and selling of like tobacco or turmeric, all those things. So beyond 1 harvest season, as the case may be, if the customer has not paid the money, it is called as what? Non-performing asset. So performing asset, there is no problem in recovery. Non-performing asset are substandard assets. Okay, for general loans and advances, you wait for 90 days from the due date of payment, then you classify them into what? Non-performing asset. Agricultural loans, for short-term crops, wait for 2 harvest seasons. For long-term crops, wait for 1 harvest season. If the customer has not paid, then you classify them into what? Non-performing assets. So performing asset na, there is no issue. Customer will pay. Non-performing asset means customer, there is a doubt. There is a doubt means the customer, there is a risk. There is a risk, that's all. So accordingly, we record income. So income recognition we will see. Income recognition means how this income will be recognized in P&L account. For performing assets or standard assets, since there is no problem, customer will pay it. So you can recognize on accrual basis. If the income is due, you can record it. If the income is due, you can record it. If it is a non-performing asset, you can recognize them on what basis? Cash basis. That is only when it is collected. Only when it is collected. So performing assets, no problem in recovery of interest or principal is expected. So recognize income on due basis. Non-performing asset, since some doubts are there, recognize only on what? Collection. Only on collection. Suppose if interest was recognized on accrual basis for NPA, then cancel it. Sir, for NPA, the accountant has wrongly included the income on due basis means cancel that. NPA income should be recognized only on cash basis. If you have recognized it wrongly on accrual basis, then you need to cancel it. So performing assets, we are going to record the income on due basis. NPA, only on cash basis because prudence. If there's a problem in recovering the money, be prudent. So only when on collection you take it as income. Please take it up, pause and copy this. Okay, so NPA only on cash basis. If interest was recognized on accrual basis already, then cancel that portion. Please copy this. Next, we'll move on to provision for bad debts. How to provision for bad debts calculated? This is as per Banking Regulation Act of 1949 and RBI circular from time to time. So it depends on the classification of asset. Provision for bad debts depends on what? Classification of asset. For a banking company, loans and advances are the assets. So for that only we are going to create what? Provision for bad debts. It depends upon what type of asset is it. So first one is standard assets or which asset? Performing asset. Okay. Next, standard asset means there is no problem in recovery. Substandard asset, it is also known as which one? Non-performing asset. When a standard asset will become NPA? When a standard asset will become NPA? When it is outstanding for more than 90 days from the due date. From the due date. For the next 12 months. For the next 12 months. Already 90 days was over from the due date. For the next 12 months, it will be called as NPA. 90 days, that means 3 months over, plus 12 more months, it will be called as what? NPA. Beyond that, how it will be called? They are called as doubtful assets. So for next 12 months, we call them as standard assets. Beyond that, it will be called as doubtful. Already 3 months over, plus 12 months we waited. Still, if you are not able to recover the money, then it is called as which asset? Doubtful assets. Let us see how to create the provision. For standard assets or performing asset, though no provision is required, but RBI recommends a minor provision of 0.4%. 0.4%, not 4%. 0.4%. Substandard assets, if it is a secured portion, create 15%. If it is a secured portion, create 15%. If it is unsecured portion, then create 25%. Secured loans, NPA 15%, unsecured loan 25%. This is for the next 12 months. Okay, doubtful assets. If it is unsecured, say already 3 months over, plus 12 months over, 15 months over. If the loan is unsecured, already 15 months over, so create 100% provision. Unsecured loans which are granted, not paid beyond 15 months from the due date will be called as what? 100% provision, which means write off. Secured portion. Secured portion means still we hold a security, but still we are not able to collect the money. So which is classified into up to 1 year, 1 to 3 years, and what? More than 3 years. You may ask a question, sir, you are holding a security, why you are not recovering the money? Sometimes security will be held by the bank, but there will be litigations. There will be some issues in the property. You cannot sell the property. Or the customer sometimes they go to the extent of committing suicide or threatening a suicide when you take the property possession. Or some second mortgage, third mortgage questions will be there. Or sometimes, other persons may have some right on the property. So in that case, just like that, you cannot easily sell the property. Or let us assume the property is held by a local politician. Let's assume he is an MP or MLA. Can he sell the property? MP or MLA property இருக்கு. அந்த property pledge பண்ணி loan வாங்கியிருக்காங்க. Secured தான் sir. You have got security. But நீங்க அந்த property sell பண்ண முடியுமா as a bank manager? Sometimes you may be threatened. Okay, அதெல்லாம் இங்க எழுத முடியாது. So though we hold security, still we are not able to recover now. You create provision up to 1 year, 25%, 1 to 3 years, 40%, more than 3 years, 100%. For example, Vijay Mallya property was pledged and at first they took a loan. The bank is still unable to sell it. So if it is 1 year, 25%, up to 3 years, 40%, more than 3 years, now 100% for secured portion also. Vijay Mallya property, more than 3 years, they are waiting. How long they will wait? Because let's assume the loan given is okay. It's not an actual figure, imagination figure. Let's assume the bank has given loan of 250 crores. Property will definitely go for a market price of 300 crores. 300 crores definitely you can sell the property. But people will form a cartel or cartel money they will form and they will not allow you to sell the property. Property is sale பண்ணதுக்கு allow பண்ணவே மாட்டாங்க. Or they will ask for 120 crores, 130 crores, 140 crores. அந்த மாதிரி கேட்டுட்டு இருப்பாங்க. Even if you give for auction, nobody will come for auction because people will form a cartel for that. Okay. So though there is a security, though there is a property, though there is a market value, though you can sell it, but people may not allow you to sell it by forming a cartel. So the loan is outstanding for more than 3 years. Though we hold the security, we are unable to sell it and recover the loan. So we create what? 100% provision. Next one is loss asset. What is a loss asset? We have given the loan, but identity of the asset is lost. What do you mean by identity of the asset is lost? For example, you have given personal loan based on the salary slips. And the person who borrowed money for the you have given loan based on salary certificate, personal loan, and the person who got the loan met with an accident and died. Or you have given loans through credit cards and other things. Okay, the person passed away. From where you will recover money? Can you ask their family to pay the money? No. In India, it is no, because we are driven by sentiments and legal rules. So if it is a performing asset, 0.4%. Substandard asset, they will give you clearly in the question. Substandard asset, if it is a secured portion, 15%. Unsecured portion, 25%. If the question is silent, you can assume that it is a secured portion. With security only, banker grants money and the money you can assume. So NPA, 15%. Unsecured portion, 25%. Doubtful assets, if it is unsecured write-off, 100%. Secured portion up to 1 year means it is not from the rate of lending. Already 90 days plus 12 months is over, plus 1 year. Already 90 days plus 12 months is over. Beyond that, up to 1 year, 25%. So beyond that 3 months plus 12 months, up to 1 year, 25%, up to 3 years, 40%, more than 3 years, 100%. If there is a loss asset, 100% provision we need to create. Please note this also. If the question is silent, assume that the NPA or doubtful assets are which one? Secured portion. Please pause and copy. And of course, no provision is required for government securities and guarantees. The government has given a guarantee like District Industrial Center, SIPCOT, Export Credit Guarantee Councils. DIC means District Industrial Center, SIPCOT, Small Industries Promotion Corporation of Tamil Nadu or whatever. ECCG, Export Credit Guarantee Councils. If they have given guarantee, then there is no provision required for them. Because government itself has given the guarantee, then why provision is required for them? Please pause and copy if required. Then I request you to go to question number 8. Please read question number 8. Please read question number 8. So packing credit outstanding is 60 lakhs. Bank is holding a security of 15 lakhs. 40% is covered by the government guarantee ECCG. The remaining doubtful for more than 3 years, like that it is given to us. Read the question once again and come to the solution. What is the total loan outstanding? Check it. 60 lakhs. Let's take realizable value of security. That is called a secured portion. We hold securities worth 15 lakhs. Balance 45 lakhs. Balance 45 lakhs. On that ECCG cover will be given. How much percentage? 50%. 40%. 40% of 45 lakhs. 40% given by government guarantee. So the remaining portion will be like unsecured portion. The remaining portion is unsecured portion, that is 27 lakhs. So total loan outstanding is 60 lakhs. In that 15 lakhs is secured portion. Balance is 45 lakhs. And that 40%, no provision required for that because it's a government guarantee. Then unsecured portion, we have to create provision. What is the provision required for secured portion and unsecured portion? It is outstanding for more than 3 years. It is outstanding for more than 3 years. So secured portion, if it is outstanding for more than 3 years, 100%. Unsecured portion, of course, 100%. Please copy this. Secured portion also 100%, more than 3 years. Unsecured portion definitely 100%. It will be 1 year or 2 year or 3 years. Doubtful assets 100%. So add up, you will get the total provision for bad debts required. Right? Secured portion more than 3 years, so 100%. Unsecured portion 100% always. Suppose if it would have been given as 2 years, what you would have done? 3 years, 2 years, 40% you would have done. Since it is more than 3 years, 100%. Please pause and copy. Then try the second subdivision, 8 subdivision 2. Try it on your own. You can do it in the material itself. Material direct multiply panikalam. It's a simple question only, you can do it. Hope you tried it. Standard assets how much? 0.4%. Substandard assets, we assume that it is a secured portion, 15%. Doubtful for 1 year, 25%. We assume that it is a secured portion. If nothing is given, 25%. Okay. For 2 years, 40%. For 3 years also, 40%. More than 3 years, it is 100%. If it is a loss asset, 100%. Just multiply and add it. 0.4%, 15%, 25%. The next one, 2 years, doubtful, 40%. 3 years doubtful also 40%. More than 3 years, how much? 100%. Loss assets 100%. So multiply and add up, you will get 1867. One eight six seven. Try the next question, question number 9. That is in the similar model of question number 8, subdivision 1. You can try question number 9. Yes, what is the total loan outstanding? 40 lakhs. Realizable value of 4 lakhs. Okay, realizable value of security 50 lakhs. Balance 40 lakhs minus 15 lakhs. Okay. Balance ECCG cover, how much is given? Yeah, 50%. Further provision is not required. Sorry, 10 extra. The unsecured portion is 1,25,000 for which 100% provision is required. So 4 lakhs realizable value of security is secured portion for which 100% provision is required, 1,50,000 more than 3 years. Balance 50% guaranteed by ECCG, no provision required. Unsecured portion 100% is required. So total provision is 22,75,000. Try to work out question number 10 next. Pause and copy. Yeah, I am fast. Pause and copy wherever it is required. Try question number 10 next. There are two values given. Okay, ECGG cover is okay. Maximum is 1,50,000. That is okay. Valuation is given on the date of granting the loan is given. Realizable value on the balance sheet it is given. So which one you will take it as a secured portion? This 1,75,000. 1,75,000 is the realizable value while preparing this balance sheet. That will be taken as a secured portion. So what is the total loan outstanding? 7,24,000. Realizable value of security on the date of preparing the balance sheet is 1,75,000. That is secured portion. 100% provision will be required. So 5,49,000 into 30%, maximum 1,50,000. 5,49,000 into 30% will give us 164,700. But the maximum guarantee given, go through the provision. What is the maximum guarantee given? 1,50,000. So 30% is 164,700, but we are given a maximum limit of how much? 1,50,000. So we can take ECGG 1,50,000. So remaining is unsecured portion. So both secured portion as well as unsecured portion up to 3 years, sorry, 40%. Up to 3 years, 40%. Unsecured portion, 1 year, 2 year, or 3 year, or 5 years doesn't matter. Unsecured portion, now we create what? 100% provision. So 5,49,000 ECCG covers 30%. Sorry. 70 plus 399, 469. ECCG cover 30% is 164,700, maximum 1,50,000 for which no provision is required. Unsecured portion 100%. Secured portion, it is not more than 3 years, it is up to 3 years. Yeah, please read the problem properly. Up to 3 years, 40% only, 70,000. Unsecured portion 100%. So 3,99,000. So total provision required is how much? 4,69,000. Yeah, go back to the provision. I forgot to add one provision. Let us add it now. For the equity, that is for NPAs backed up by escrow account. Escrow account is opened in certain special events like buyback of shares or, for example, redemption of preference shares. Okay, or certain special legal transaction. This escrow account is required. Suppose if money is kept in escrow account, okay, if the loan is backed up by escrow account, then for that 20% provision is required. Okay, secured portion of NPA 15%, unsecured portion of NPA 25%. If it is backed up by an escrow account opened as per the legal requirement, that is 20%. Simple examination escrow account take 20%. There are so many circumstances in which the company law will ask you to prepare or open which account? Escrow account, nothing but a bank account. Go to the next one. Standard advances are given, substandard advances are given. Unsecured exposures are given. Some escrow account details are given to us. Read it. Substandard assets 1,000, that is 15% provision will be required. Secured portion. Unsecured is 2,500 lakhs. In that 1,500 lakhs is escrow account. In the 2,500 lakhs, 1,500 lakhs is escrow account for which 20% provision will be required. Sorry, yeah. 1,500. Remaining 1,000 unsecured 25%. So 3,500 like those bifurcations. 3,500, 1,000 and 2,500 like that. Doubtful assets 100%. Unsecured portion 100%. Secured portion up to 1 year 25%. Up to 3 years 40%. More than 3 years 100%. Loss assets 100%. The 3,500 is classified. Work out, add up, pass and solve it if required. You will get 5062. You pause and copy this wherever it is required. Performing asset 0.4%, substandard asset secured portion 15%, unsecured portion 25%, backed up by escrow account 20%. So fill up the amounts. 5,000 into 0.4, 1,000 secured portion 15%, unsecured portion 1,000, that is 25%. Out of 2,500, 1,500 is backed up by escrow account. Remaining 1,000 is unsecured. Then doubtful assets, unsecured portions 100%. Secured portion up to 1 year, 25%. 1 to 3 years, 1 to 3 years, more than 3 years, yes. Loss assets 100%. Multiply it, you will get the provision for bad debts required. Yeah, 3085, not 5086. Sorry, 3085. Pause and copy if required. Yes, you check the question 3500 secured portion 1000, remaining 2500 will be there. Backed up by escrow account is 1500, for which 20%. Unsecured portion is 25%. That is for substandard assets. Doubtful assets it is direct. Next, I request you to take a break. Go through the format of P&L account that we learned in the last class. Go through the format of P&L account learned in the last class. Interest earned, schedule number 13. Other incomes, schedule number 14. Interests paid, 15. Operating expenses, 16. Then provision for bad debts and P&L, that is tax will come in the P&L account. We work out net profit. 25% of net profit has to be transferred to reserve, statutory reserve, other reserves, all those things. I request you to go through these format notes, then we will proceed. Right? We have learned discount on bills, add opening rebate minus closing rebate. Take it over there. Clear? Interest on loans and advances, cash credits and overdrafts. All types of interest. Then discount on bills, add opening rebate less closing rebate. Other income from investments. Other incomes. Any other incomes. Charges made in the account, SMS charges, profit on sale of asset, locker rent, value added services that is provided like locker, all those things, brokerage, commission, etc. charged by the bank, interest paid by the bank on different types of accounts, operating expense of the bank, then discount on bills, add opening rebate, less closing rebate. Please go through all these things. Schedule 13, 14, 15, 16. I request you to go through because we have to prepare the P&L account, and of course balance sheet we learn it later. So 13, 14, 15, 16 knowledge is required. Please go through that. Bad debts and tax is coming in the main P&L account itself. So please go through the format, then we will continue.